All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off with the S&P 500 here. So we had some major developments last week. On the SPY here, we did break the 50 moving average, and we closed below this little rising wedge channel to the downside. Now, it's important to point out just briefly here, the SPX just barely closed below the 50 MA. The SPY did pay a dividend, so that's why it is a little bit lower, as you can see on the chart there, than the 50 moving average as opposed to the SPX. But there's a few things to unpack here. Is this a breakdown? You can make a technical case that you have this lower trend line here, and you're going to see this chart probably all weekend long. Every perma bear is going to be posting this rising wedge here, but yeah, you do have a break of the 50 MA, but there's a couple things here. So first of all, we had a quad witching expiration, options X this week. So you always want to take that with a grain of salt here. And the last time that we had a quad witch was in June. Remember this gap down below the 50 MA here. See that? We had the gap down in the flush. Everybody remembers that. And then Monday, we just rallied right back up. So again, it's going to be interesting to see where this market opens Monday. We also have the Fed next week on Wednesday. So that is going to throw a wrench into things. There's a lot of things converging right now. And I'd urge caution. I want to short this market as much as anybody, but, we have to wait for the tape to be right. And there's a couple of things here that make me believe that this is just a little bit of an options X shakeout and nothing more than that. First of all, Russell 2000 has actually held up really well. Sure, it has been a little bit negative, has pulled back a little bit here, but it was actually green on Friday. Some other things, Tesla was green on Friday, outside day from Thursday. So Friday was an outside day up. And then you have Apple. Apple did break down a little bit, but I mean, it's still holding this, this previous all-time high here. It's still in, a relative uptrend. There's a lot of things here that, Microsoft, look at MSFT. Microsoft is still in a strong uptrend. Google did have a little bit of weakness, but again, look at this uptrend here. It hasn't really broken any sort of trend yet. So it's not like we're seeing massive dumping across the board. The transports were a little weak, however. This 200 MA should be a little bit of support, but we've kind of like gradually risen up into it and pulled back into it. So I don't expect it being huge support. So the transports are a little vulnerable. But then you have the semiconductors. Semiconductors, all they did Friday was just back test this 20 MA, and they passed the back test. Granted, it didn't bounce too heavily off of it, but I mean, it's still above all four major moving averages. So there's not a lot of chart breakdowns in the market right here, despite the weakness that we had last week. In addition to that, if we flip over here, look at the bull-bear ratio. So bull-bear ratio is at a 50% mark right now. Typically, if the market is going to top out, we need to see it at least 60 to 65. It's telling you there's a lot of bears in the market relative to bulls, and that's really a healthy sign for the market overall. You've got even the talking heads on CNBC talking about how we need to be careful right now towards the end of September. I never like it, when you've got the talking heads on CNBC getting bearish, during this time period. We all know how much of a contrarian indicator they can be. If you look at the commitment of traders here, commercials are still, looking at the SP here, commercials are still net long by quite a margin. They did add a few short contracts and removed a few long, but they're still net long. And the non-reportables, the small money, added 4,000 short contracts. Look how short they are relative to the longs. So until this changes, I just don't, I mean, it's not to say that it can't happen. It's not to say the market can't top, but it's not likely to see a major top put in. We could maybe roll over and have a small correction here, but it's not likely to see a major top in the market when we have all of these different things I just mentioned. The VIX, again, the VIX has a little, had a little green inside bar there, a nice little pop, but if you look at the VIX all week long, while the market was dumping, it really didn't do much intraday. So here's Monday here. We got a nice pop, and it was down, and then it was down again Wednesday. We had a nice little pop, and then sold off, and then we had a nice rally Friday. But the VIX really did not move very much. There was no mass dumping. It was not a broad-based decline by any means. So until the market really proves, I'm in more of a prove it mode. If the market proves itself and we take out this pivot here, which would be at about 436, if we take that out, then you can say, okay, now there's a lower low for the first time since really March of 2020. And then, we would then look for a lower high. Maybe it comes down, hits the 100, and then back tests this trend line. That would be an area to jump short. So that would be an area I would look to take a short in the market, perhaps, if everything else lines up. But until that happens, we got to remain neutral and we got to be cautious here. So that is where I stand as far as that is concerned. So moving on here, let's talk about crude, because crude had a nice little move this week. I talked about this blue channel here that we've been in. I've been talking about that for the last couple of weeks. And we had a nice little push through that. You had a nice little bullish inside bar right here, a little pop sideways and then pop again. Got through that and confirmed above it. Now I still think that we could stall out around 74, but if we start going sideways a little bit longer, then 74 becomes minor resistance. This pivot will become minor if we start consolidating. And then we could probably, get up there to test that 76, 77 area. So that could be on the table. But as of right now, we're just going to give it, the upside bias to about 74. And, if it starts going sideways, then it can get a little bit more juice in it. But that's where I see oil in the near term. Now, it doesn't mean it can't pull back. Maybe it pulls back and tests this lower trend line here. That's a possibility as well. But right now, I'm a little bit kind of neutral on oil at the moment, but I will give it the short-term upside bias. And then so let's move on here to precious metals. We got to talk about gold. So gold got whacked again. And, last time this got hit really hard, we got hit in August too, but the last time it got hit hard was that quad witch in June. So we all remember that big dump there, and gold getting hit again. Now, there's a couple of things here. So if this does move lower, and if this gets down to this 1670 handle, 1, 2, 3, 4, that would be the fourth time. I don't like its chances of holding that area, to be fair. However, this could end up just being a ridiculously good buying opportunity. So we hit the 382, and if it comes back into the 50% retrace, you have this 50 monthly moving average sloping up, and that would meet around the 1550, 1560 area. You have this little breakout area. I'd jump all over gold at that area. So, long term, there's really nothing wrong with it, but short term, it's hard to get really excited about it. Now we do have the Fed Wednesday again, so that could, there's not to say that we can't just rip back up and close above this red bar, but until that happens, we just got to take it for what it is. You can't fight the tape, and gold got hit. A lot of people have been talking about, why is gold not keeping up with inflation? We had these 5%, 8% prints on some of these inflation data. And the thing is, gold predicted that last year. So gold can be a leading indicator very often. And look what it did in March 2020 to August, September 2020. So it was really predicting that inflation that we're seeing now. And so perhaps now gold is predicting that we're going to have some type of major contraction because of all the inflation. The shipping rates from China to the US are exploding to, $20,000 container. We have, meat prices just went up at the supermarket where I live again. Feels like they have not come down since pandemic lows. I don't need to tell you guys about inflation, but it could be getting to a point where consumers decide, hey, I can't go out and buy that extra snack or whatever. I just got to buy the essentials at the grocery store. Or, I'm not going to go out and make this purchase, and work on my house or do whatever. It could be a bit of a tightening of the belt coming on. So that's something to think about. Don't discount what gold is doing right now. It's probably telling us something. So then let's move on to silver really quick. This is an interesting one. So this held on to this pivot low by really a thread here. So this pivot low is $22.29.5, and we tagged it, closed up at 22.36. So we barely got above that on spot silver. Now the thing is, you still technically have 3 higher lows in place here, but if it loses this area, you might want to look back to $19 or $20 on silver. and that would be an epic area to buy, in my opinion. So that's really on the table right now. But again, with the Fed meeting near term, we just got to be kind of neutral on it at the moment. So that's just kind of what I'm looking at there. Let's move on. We'll talk about, let's go to uranium real quick. So I'm pulling up uranium on TradingView. This is a weekly chart here. You can see that this is just blasted off. Now, uranium is a very thin market. That's why I'm using a weekly. You can see on the daily here, it's just so thin. But, you know, uranium upwards of $50 now, closing at 50.80 on Friday. If we look at some of the producers, you know, Cameco. Now, Cameco's pulled back a little bit here. You've got Denison pulling back a little bit. URA, URNM. So these things coming back in and diverging from price a little bit. So there may be a little bit of you know, a little bit of a retrace in the cards soon on spot uranium. But you know, these producers are starting to look good. You know, if we get into this 20 MA here and it coincides with this pivot top, that could be a, you know, a good area for a swing long. But ultimately, again, like I said, if you're looking to enter this for a long-term position, you don't want to chase it up here because it will pull back, and it's started to do that now. So nice little move there on uranium this week. This may also have been OPEX related as well. You know, this big thrust into OPEX week, a lot of people jumping on, buying calls, and then the institutions take it down to burn out those premiums. That's super common. It happens all the time. It wouldn't surprise me for uranium to resume here. But if we just take a little fib here on Cameco, you could say a 50% retrace, you know, right in this area. That could be a good area to add to your position. Maybe it gets a little bit lower to that 618. But yeah, nice little move on uranium this week. And yeah, just kind of digesting some of those gains we've had recently. And then we've got nat gas, which has been a freight train, although it did come back in a little bit Thursday, Friday. And I want to show you something on the weekly here. So we do have a potential topping tail here on the weekly time frame with good volume. So we got all the way up to 565 and closed at about, you know, just over about $5 and change here. And you know, monthly it's still kind of holding up, but you know, we've got 2 weeks left or so. But this pivot's going to be a lot of resistance. I know I've been talking about, you know, I thought that net gas would stall out around this 450 area with the 200 monthly and this pivot top, but it's been a train. So you know, we would need to see some sort of downside confirmation. If it has a red bar and really retraces next week, closes lower, that could be a short-term top in nat gas. But until then, we got to give it the upside bias. I mean, it's just been a freight train as of late. So yeah, congrats to nat gas bulls there. But yeah, that's about all I had for you this week. Again, we have the Fed on Wednesday. It's going to be very interesting to see where they open this on Monday. Do they gap it down and we test this 436? Or do we have a short covering rally like we did pretty much every other time after OPEX, and they get us right back up to that 20 moving average? But again, the Fed Wednesday is going to throw a wrench in everything, most likely. But until then, again, we got to just be neutral here and let the market tell us a little bit more. But anyways, guys, thanks for listening, and take care. I will talk to you next week.